Hi everybody, welcome to another update on the stock screener. I got a request to look at Taseko mines, and actually this is a copper mine and we should look at it because it is an important mine. Profitable and has growth. So let's take a look. So at first sight, 400 million US dollars. You would think that it's cheap, but when you look at the balance sheet, there's a lot of debt. 600 million debt and other things as well. So the enterprise value is going to be a lot higher than the market cap. And there's also another project that they are going to build that's also going to eat away from the cash. So that's something to keep in mind. It's very complicated, this company. It has three projects, one producing, two, the second one is going to production in 2 years, and then another project is also going to go in production, but a bit later, maybe 5-6 years. So very complicated. I think by looking at the EV to free cash flow, that's not going to be good enough. But anyway, we start with it. So they have one producing mine, Gibraltar, this one. And based on this alone, we have 130 million pounds production, all-in sustaining cost 2.5, capex around 30 per year, 30 million. We have some interest payments. I think tax rate around 30-35%. Now, at first sight, EV to free cash flow is very high and leverage is also good at 4, but a bit overvalued currently. But that's only Gibraltar. Now they also have Florence copper that is going in production in 2 years from now. Gibraltar, by the way, is 88% working interest. Now they have Florence copper that's in construction now with a remaining capex of 232 million. So we will have to take this into account. And once that is in production, we will have a bit more production, probably around 60% more, plus 85 million per year. And that will give 215 million. And the cost will come down a bit, 2.2. And that's the chart here. So EV to free cash flow is going to become actually a pretty good valuation at 8 to 7. So if Florence copper gets in production and does what it is supposed to do, then I think this is a pretty good buy. Yeah. So in 2 years, this will be a pretty good buy because Florence copper is going to get into production. And both mines have 22 years of mine life. That's good. Now, this is not going to be too indicative. So let's use an NPV chart to estimate the value. So I already have the enterprise value, 1.4. That was the current assets. These are the liabilities and the current market cap. Okay. Now we will fill in the details. Production 130 million. Let's assume that this is going to be constant for the next 22 years. Okay, that's one. All-in sustaining costs for Gibraltar is 2.5. So 2.5 for 22 years. Actually, this is how many years? 10, 20, 23. Okay, so with Gibraltar alone, this company actually is fair value, not undervalued. But it's fair value, so it's buyable. Now, well, actually, we still need to add the capex. I think this is going to be 30 million. 30 million for Gibraltar alone. Not sure if it will stay at 30 million, but let's say it will stay at 30 million forever. Still fair value. Interest payments were at 56 million. Let's keep it constant. I don't think they will pay it off that fast. And now it becomes actually overvalued. Okay, this was 35 tax rate. Okay, so this is only for Gibraltar. Looks overvalued. Actually, we also need to, so the 130 million that we see here, don't forget what's the working interest. This is 100% basis, okay? 130 million is 100% basis, and they only own 88% of that. So we need to update this. So it's not 130 million, it's going to be this times the working interest, 88%. So less production. Right? And then it becomes overvalued. So this is production Gibraltar and AISC Gibraltar. Yes. Now we add a line. 2 lines. Production Florence. AISC Florence. Yes. So what's the production of Florence? It's going to be 85 million. As you can see here, 85 million pounds for 22 years. Okay. I'm just doing a quick estimate. There could be some more details behind it, like payability, etc., and royalties, but I'm just going to give a non-complex estimate. And you can look at the details. AISC is, this is the cash cost. So AISC is going to be a bit higher. I don't know how much, but let's say 1.3 or something. 1.3 US. 1.3 US, just an estimate. No, that's in US dollars. Okay. Just an estimate. And then we add the revenue here. So plus production of Florence times copper price times exchange rate. That's the new revenue. And costs plus production Florence times AIC Florence times exchange rate. As easy as that, 22 years as well. And then we get undervaluation. But of course, this production is going to start only in 2025. Yes. First copper production expected 2025. Okay. Probably 2026, but let's just use this. Now the production is 0. Right? Still good value, but we also have capex. 232 million US dollars is 318 CAD. So I will add it here. 318. That's for the Florence capex. Yes. Cost we already have. So there's a little bit of dip here and then we go back up. Actually, this is looking pretty good. Yeah. Problem is there's this gap here. A gap of 10 years to get your money back. We have copper mines where you get your gap fill in only 3 years. And then it goes like this. So why should I buy Taseko if I can buy something like this? This is just going to be an upside of maybe 50%. Yeah, 50% is possible. Yeah, based on this estimate. It's not bad. Not bad at all. But there are better copper mines than this. And we use copper price of 4.4. Now there's also Yellowhead, which is going to add 180 million. So that's almost going to double this production again. But I haven't added this yet. It's still early stage. lots of capex. So this could actually go even more to the upside if we have a copper bull market. But let's just estimate for Florence and Gibraltar. So I think we have our estimation. Revenue, production was based on 88% interest. I think Florence is 100%. Not sure, but they didn't say anything here, so probably 100%, right? No, they didn't say anything. Remaining capex 232 million, so that's added here. Probably this capex will be a bit higher, let's say 40 million, because they have two projects that are in production. Two mines in production, so I expect a bit more capex. Still, it's pretty okay. Interest payments could come down, but first it will probably go up because they still need to finance Florence. So I will just leave it at 56 million for now. Okay. This is the estimate. I think it's not bad. It's not bad at all. So I see some upsides. But you need to have a 4.4 copper price. If we have 4.1, what happens then? Then it's still good. Still 10% upside. Yep, 10% upside. Or 30 to 40% upside with higher copper. Yeah, what do you think? Is it buyable? To me, this is fair value. I would not buy this one. Things could go wrong with Florence. They say it's 1.1, 1.2 cost, but what if it's higher? What if it's higher? So they say that the C1 cost will go to 1.4 US dollars. From 2.3. Yeah, that's a pretty big drop in costs. And that's because Florence is so low cost. So this could actually be even lower too. It's unbelievable, but yeah, but this is C1 cost, so it will probably be somewhere here at 2. At 4 copper, it's fair value for a big mine. So yeah, that was the quick estimate for Taseko mines. I think this company is fair value and will just follow the copper price up and down. That's all it is. I want to take a look at the leverage actually. So what's the leverage? Let's say we have 4 copper. Just going to do a leverage check. So at 4 copper, we have an NPV of 1.7 billion. NPV 10, 1.76. Now if we go up 10%, that's 4.4. What will happen then? 10% higher copper price. Then we have 2.35. So what's the leverage? So this is a 10% increase. And what's this? How much is this? This is, I'm just guessing around. It's about 30, 34% increase. Yeah. So this is 34% increase in the NPV. So the leverage is 3.4. This goes 10% and this goes 34%. 3.4 leverage. Yeah, 3.5 to 5. Not sure why this is 5.8. This doesn't change. So it's pretty high leverage actually for a big mine. 3.5 leverage. Let's say four times leverage. It's actually not bad. Okay. 4 times leverage. Let's take a look at EV to free cash flow. EV to free cash flow is this divided by this. So first we have 13 EV to free cash flow, and then it goes to 4, probably 4.4. And that's this times 4 is this. Okay, so actually a pretty cheap mine when Florence gets into production. Yep. If the copper price stays at 4.4, of course, at copper price of 4, then we have 5 EV to free cash flow. And that's the same as this one here. Here it's 7, but based on this low cost, it's actually more like 5 to 6. Yeah, I can see why people get excited about this copper mine. It's actually a bit undervalued. There is some upside. 30 to 40% is what I think. So it should go up to $2. Yep, that's the fair value. If the Florence copper mine gets into production, that is. Then it could go up like this in 2 years to $2. That's what my estimate is based on all of these numbers. So yeah, I think it's a buy, but I have other companies that are much higher in upside. And I'll see you next video. Bye.